Markets take a U-turn as the Samajwadi Party toughens its stance on the support to the UPA government. The Sensex ends at a fresh 4-month low and blue chips like Reliance Industries and SBI as well as L&T continue to drag. In a big boost to exploration companies like ONGC, Reliance Industries and Care India, the empowered group of ministers will meet in the next 15 days to review the gas pricing. Sources tell ET Now that the oil ministry headed by Virappa Moily in favour of a hike in prices and gas producers are likely to sign fresh pacts after the revision. Within 4 weeks after it raised around $1 billion from international investors, BHARTI AIRTEL hits the bond market again. Sources tell ET Now that the company is looking to raise around $400 million this time around, which will be used to retire the high-cost debt. Small saving schemes could now fetch likely lesser returns. The government decides to lower the PPF rates to 8.7% versus 8.8% earlier, also cuts the rates for popular schemes like NSC and the savings deposits. The Enforcement Directorate is likely to name DB Realty's Shahid Balwa in its first charge sheet in the 2G scam case. ET Now learns that Kanni Modi and A. Raja may also be named. Good evening, you're tuned into Business Day right here on ET Now. I'm Ava Andabash. Let's take it straight to our top story for the day, one that jittered the markets as well. Samajwadi Supremo Mulayam Singh Yadav has dropped another hint that he may part ways with the UPA government. Addressing a rally on Sunday, Mulayam said that the era of single-party politics was over and that the future of politics belonged to coalition governments. Let's get in our policy editor, Supriya Srinath, who now joins in for more details. Supriya, is there a possibility of the Samajwadi Party backing out of the UPA?
Mulayam Singh Yadav is obviously flexing muscles like he would perhaps be expected to. He's got 22 MPs. He is a kingmaker of sorts. He realizes the UPA needs him for their survival. But if you step back from national politics and onto state politics, does Mulayam Singh Yadav, or can he really afford an early election in Uttar Pradesh? The answer to that is a terse no, because his own son Akhilesh is really struggling with governance there. The sailing hasn't been as smooth as one thought when Akhilesh came into power. Look at the other kingmaker, and that's Mayawati. With 21 MPs from Uttar Pradesh, can she afford an early election? She doesn't want to. She wants Akhilesh to make more mistakes, and that is obviously something she's going to cash in on. So the two kingmakers, however fickle-minded they may be from UP, actually do not want early elections. He may well pull the rug from under UPA's feet, but that will perhaps happen very close to general elections and not right now. He may want to form a third front, but that doesn't necessarily mean he wants to destabilize this government. So many people in New Delhi in decision-making capacity believe reforms will continue, decisions will happen, markets perhaps do not need to worry about the stability or the survival of UPA2. Mulayam does not want early elections. The whole talk about a third front, or the whole talk about this, really has to do with a lot of hard, tough posturing. He does not want to be taken for granted by Congress, which Congress very often does with its allies. He wants to be in a position, and a big position, to bargain, and that's perhaps what we are seeing being played out.
Well, in fact, political reactions were quick to follow after Mulayam Singh Yadav hinted at the possibility of the formation of the third front. While the Congress dismissed the idea, its main opposition, the BJP, feels that given the political uncertainty, political parties are free to keep their options open.
Congress is on a track of ideology of Gandhiji and social and secular ideology of Pandit Jawaharlal Nehru. Therefore, we are not bothered.
If you look at the history of the past 20 years, the history of coalition politics in India, the reality is that a third front or a fourth front or a fifth front has been the most enduring mirage of Indian politics.
There is an atmosphere of political instability, and in an atmosphere which is full of speculation and political instability, it is imperative that political parties will like to prepare themselves for midterm elections, and one has to see all these, what is being said about elections, in that context.
एक पार्टी के आधिपत्य का दौर, वह विचार व्यवहार में समाप्त हो गया है। अब ये गठबंधन सरकारों का युग है, और ये आने वाले काफी समय तक गठबंधन की सरकारें ही हमारे देश में चलेंगी।
Straight to how the equity markets panned out today, with a lot of global news flow coming in as well. Remember, the Cyprus bailout cheers did come about, but that was very short-lived because there was weakness which were led by all of these fresh political concerns on reports that we just pointed out that the SP might just pull out from the UPA. So big U-turn coming in, 56.33. We ended below the 56.50 level, below our 200 daily moving average. The Sensex shaved off 54 points by the day's close. For the broader markets, it was pretty much in tandem with the way the frontliners panned out. In fact, the mid-cap index shaved off close to 80 points from the day's high to end lower by close to 0.3%. Similar was the case with the small-cap index. You had metals and cap goods, big underperformers today. On the gaining side, though, real estate as well as power, those two sectors did spike up. Some of the laggards in today's session included a Bank of Baroda off by 3% almost. Hero Motorcorp saw lingering weakness. L&T as well as Tata Steel, which by the way was a short-selling candidate for most of our technical experts. Some stocks in focus, it was the entire oil and gas pack which really drove gains today. So the likes of a BPCL managed to sustain those gains. Oil India was up and about given the fact that we did have the diesel price hike by close to 0.45 rupees per litre. So that's about 45 paise per litre over the weekend. Apart from that, it was certainly the oil and gas space which dominated the news flow, given that KN India and ONGC were in focus. ONGC, in fact, gained this at the highest level since the 14th of Jan on account of positive news coming in. Apart from that, you had GEODESIC, which was in focus. The company's restructuring process, according to them, is in its final legs. It's likely to be completed during the first half of next week, up by 4%. Ranbaxy said to get the US FDA nod on alternative drugs for Novartis's Diovan, as well as Roche's one of its other drugs, and that really augured well for the company. You had quite a few counters from the infrastructure pack which did very well, but they petered off. It was only GMR Infra which held on to its very smart gains, as the NHAI board will be discussing the proposal for financial relief for the company, helping to restart some of its work in the Kishangarh, Udaipur, Ahmedabad project. Some of the index gainers included DLF, NTPC saw a smart up move. You had ONGC as well as BPCL, as pointed out, which saw some top-notch gains. But time to get in some expert opinion on the view for the markets going forward.
I think sentiment has clearly improved. You know, the political turmoil and uncertainty that we had seen over the last 3 to 4 days would almost certainly be partly countered by the increase. I think it is time to be slightly more positive on the OMCs, because I don't know whether this is a, kind of a sea change, in a sense that if it's moving away from the regulatory regime that we had seen for the oil marketing companies to a more free pricing kind of regime. I think, you would see the rupee strengthening slightly. I think the government is trying to clearly indicate that it's trying to de-link politics from policy.
We are quite long on equities, Indian equities right now, because we think the economy bottomed out last quarter, and it is going to be a slow move up now. It might be a good valuation point, but sentiment-wise, we don't expect any domestic flows in the near future to come into the markets.
Okay, that's some market opinion coming in there, but moving on, and it's a decision that will bring in good news for gas exploration giants like ONGC, Reliance Industries, and even KN India. The empowered group of ministers will meet in the next 15 days to revise the gas prices. Let's get in Nitya Balakrishnan, who now joins in from our Mumbai newsroom with the latest details. Nitya, what is the oil ministry proposing in terms of gas pricing?
That's right, an empowered group of ministers headed by A.K. Antony will be meeting within the fortnight to actually take the crucial decision on reviewing of gas prices. What we're given to understand from sources in the oil ministry is that they've already received responses from various departments on their draft note. They will be sending a final proposal to the EGOM within the fortnight. Of course, we're given to understand that the oil ministry is batting for a price revision in line with Rangarajan's recommendations. They are seeking any kind of price between $8 to $8.5 per unit. Now remember, this is a considerable doubling of current prices, which are between $4 to $5 per unit for both APM and non-APM gas, but considerably lesser than what companies like Reliance Industries did seek a little while earlier at $14 per unit. We're given to understand it will be for 5 years, after which they will review gas prices. But clearly the rider here is what the oil ministry is seeking is it will be prospective in nature. There will be no revisiting oil production sharing contracts. So in the immediate term, it will be companies like Oil India and ONGC which will reap the benefit. for Reliance Industries, especially for GEODESIC. The price revision will only kick in post 2014 after the current contract of $4.2 per unit for a gas supply actually expires. A crucial decision which power and fertilizer ministries are likely to be very concerned about, but definitely A.K. Antony and EGOM headed by him has an uphill task ahead of him in order to review gas prices going ahead.
Thanks very much, Nitya, for giving us. Let's take it straight to the telecom space, and BHARTI AIRTEL plans to raise another $300 to $400 million via the overseas bond market. Now remember, this move comes close on the heels of a $1 billion issue which drew massive interest from investors. Let's get in Sunita Nagpal, who now joins in with the latest details. Sunita.
Yes, exactly. That's what we are picking up from our sources. That company is looking at tapping the bond market again, and they're looking to raise roughly about $300 to $400 million. Remember, they raised $1 billion on 5th March, and this issue saw 9.5 times oversubscription. So there was a lot of unmet demand, and the company is basically encashing on that unmet demand and planning to raise another $300 to $400 million. And these funds raised will be used to refinance the debt that is sitting on their books. Remember, they have a high debt of roughly about $13.5 billion on their books, and this bond issue will help them increase the maturity time for the debt as well as reduce the cost of funds for them. Remember, the last bond issue had a tenure of 10 years, which was maturing in 2023. We are expecting this bond issue also to have a similar tenure and also the similar rate of return of roughly about 5.125%. That's what we are expecting. We approached the company, and the company said they declined to comment on this news, but we are picking up. They will be soon tapping the bond markets, and they are looking at raising roughly about $300 to $400 million, and this will help them and reduce the cost of interest for them, and this will also help them to diversify their debt liability portfolio. That's what they're looking at by doing this bond fund.
Thanks very much, Sunita, for giving us all of those details. And despite that positive news coming in, though, the stock price didn't manage to hold up in the green and ended lower in the session. Meantime, the government has revised the small savings schemes rates, cutting the PPF rates to 8.7% versus 8.8% earlier. However, one-year deposit and post office savings deposit rate, that has been left unchanged. Let's get in Mrinalini Krishna, who's got all of the details regarding the same. Mrinalini, what have you got for us?
The industry was clamoring for a rate cut, and the RBI did oblige. However, it is the small savers that will take a hit. Now, the government has decided to moderate the interest rates that it pays on small savings schemes to the extent to keep it in line with the lower interest rate scenario. In fact, the government has cut on most small savings schemes the interest by 0.1%. So, for example, the PPF that was paying you 8.5% return per annum will now give 8.7% return. The 5-year NSE will give 8.5% return. 10-year NSE will yield about 8.8% return. The time deposits too have seen a rate cut. The 3-year time deposit getting 8.3%, whereas the 5-year time deposit will yield 8.5%. So all of these have been cut, keeping in mind the lower interest rate scenario that is being envisaged. These rate cuts are applicable from the 1st of April. The only thing that does not remain unchanged is the savings deposit that will continue to offer a 4% return.
Thanks very much, Mrinalini, for giving us all of those details. Well, moving on then to the 2G scam, and almost 3 years after the Controller and Auditor General dropped the 2G scam bomb, the Enforcement Directorate is finally ready with its first charge sheet in the scam. And this could probably spell trouble for Shahid Balwa, A. Raja, as well as Karunanidhi's daughter Kanni Modi. Let's get in Suchetna Ray, who's got all of the exclusive details. Suchetna.
Avan, sources and Enforcement Directorate tell us that they're ready with the charge sheet. They're just waiting for some indication from the Supreme Court when they can go ahead and present it. Sources indicate that this charge sheet is likely to be filed within the next 3 weeks, and it could spell real trouble for Shahid Balwa, his company DB Realty, Karunanidhi's daughter Kanni Modi, A. Raja, as well as the DMK-owned channel Kalainia TV. This charge sheet will be filed under Section 4 of the Money Laundering Act, and sources tell us that it alleges laundering of about 220 crore rupees between Kalainia TV and DB Realty, and obviously it passed through a maze of other companies as well. The first thing we need to remember is the day this chart sheet is filed, we will see a spate of properties being attached from both DB Realty and Kalainia TV. Also very bad news for Shahid Balwak, Raja as well as Kani Muri, because if they are actually named as in this chart sheet, since it's filed under the Stringent Money Laundering Act, it will lead to imprisonment of at least 7 years for all these three if they're proven guilty.
Okay, thanks very much, Suchetna, for bringing us all of those exclusive details. Moving on then, and finally, after months of deliberations, Kishore Bayani-controlled Future Retail today sold its majority stake in the non-life business to L&T. In a new joint venture, we understand that L&T will hold a 51% stake with Future Retail to have 23% and its foreign partner generally holding its 26% stake. Let's get on all of the exclusive details on this deal from Vijay Iyer. Vijay.
Absolutely, Avan, what we are gauging is that both the boards did meet earlier in the day today and the deal finally has been cleared. The official release to the exchanges may come out as we speak. Now basically what has happened is a new joint venture has been formed in which L&T will hold a majority stake of 51% and Future Retail will retain its stake around 23%, and Future Generali, which was the foreign partner, will continue to retain the stake at 26%. Now this deal is valued around 500 to 550 crores. That's what sources are indicating. From a Future's perspective, this is in line with their strategy to exit the non-core business, thereby just focus on the retail business, and this will once again help downsize their debt of a Pantaloon Retail. From L&T's perspective, this is a business which is being formed under the L&T parent company for the last 2 years. This acquisition will only help them gain the much required scale and scale up the business in the non-life business. So it would be interesting to see how things would pan out for L&T after this acquisition on the non-life space, and there are indications eventually maybe this business will also be merged with this insurance unit of L&T Finance. But as of now, this is the acquisition that L&T has done with Future Group, and the announcement is expected any time now on the process.
Okay, we watch out for that announcement. Thanks very much, Ija, for giving us that heads up. So that deal is valued at 500 to 550 crore rupees. And it's a booster shot for Indian drug makers. A proposal to create a special package of at least 1,000 crore rupees for pharma companies has been sent to the cabinet. We've got Sriram Iyer standing by from New Delhi with the exclusive details. Sriram, what exactly does this mean for the pharma sector?
It is indeed a shot in the arm. The Union Cabinet is considering a proposal to set up 1,000 crore rupee corpus for Indian truck companies. This is not for the bulk truck manufacturers but more for the innovators, companies which say want to move up the value chain by buying new equipment. They can seek support from the government on this front. In its current proposal, in its current form, the Cabinet note also proposes to support setting up of wastewater treatment plants within pharmaceutical facilities. Not to mention that there will be special emphasis on research and development of new molecules and new drug delivery mechanisms. Of course, it is safe to assume that there will be checks and balances and set criteria before the government starts doling out this support. Nonetheless, it will be a big boost for the sector, sentimentally and operationally, especially at a time when there are growing number of roadblocks for Indian generic drug makers in key export markets like US and Europe. When do we expect a final decision on this front? Sources tell us that the Cabinet may take this up for consideration within a month's time. Back to you.
Thanks very much, Sriram, for giving us those details. So sentimentally, it is certainly a positive coming in for the pharma sector. Shifting gears then to auto, and the industry is looking to lure customers with huge discounts. In fact, that is going to provide a steep discount, and that would be the only way to bring about some excitement among buyers. Kartika Trehan went car shopping, so let's find out about some of the best deals that you can watch out for.
You have to wait for at least 6 months to lay your hand on a brand new Swift. Now that was a story a year ago. Today you can buy the best-selling car from Maruti's stable off the shelf, and that too at a discount. It's time to get started and find out more on the discount. In a way, the Swift sums up the story of Indian automakers who are trying to outsmart each other to get the numbers. Sample this. India's largest selling car, the Alto, comes with a free Sony LCD TV, while there are cash discounts of over 50,000 rupees with every WagonR and SX4. Volkswagen has gone one step ahead. You can drive home in a new Vento paying just 1 rupee in exchange of your old car. The balance can be paid in easy installments, that too after a year.
So let's find out if the offers are bringing about some excitement among the customers and they're looking to buy the car.
This is really exciting time to buy, and we are getting discount on it.
They announce for certain discounts and good discounts, so that makes the car a little cheaper and one can buy.
A good offer with good freebies. We wouldn't mind going for another car.
In fact, the Skoda goes an extra mile. Buy a Rapid and get a Fabia free after 5 years is the ace from the Czech car maker. This benefit is available only in Gujarat for now, but the company believes it could be moved to other cities if the response is good.
Let's go get a sense from the dealers whether the inquiries have increased and they're hopeful of better sales in the month of March.
The inquiries have increased. This is basically last month of the fiscal year. So we expect inquiries should have gone up, which has happened. And the bookings have also started rolling in.
It's that time of the year when automakers are on an overdrive to push sales. But this time around, car companies are trying every trick in the book to stay ahead of their rivals, and it's the car buyers who's having the last laugh. Kartika Trihan, ET Now, Mumbai.
Okay, so that's the word coming in the auto space, but that's about all the time we have right here on Business Day. Thanks so much for watching.